for this discussion, it gives me pleasure to invite our panelists to the stage. Please welcome them as they come to the stage and share their experiences and knowledge on this all-important topic of reducing the risks associated with investing in smallholder farming. I want to start by introducing Miss Hope Moreira. As Hope comes up, please give her a round of applause. She's the Managing Director and CEO of ZEPRI, and she's going to be speaking to us on insurance and risk protection for African smallholder farmers. Please also welcome Mr. Manuel Moses. He's the CEO of the African Trade and Investment Development Insurance at ATIDI, and Mr. Moses is going to be speaking to us on credit guarantees and de-risking for financial institutions. Please also welcome Mr. Deribi Ashfor, who is the CEO of the Cooperative Bank of Oromia in Ethiopia. He'll be sharing the perspective of financial institutions and how to unlock small to medium enterprise lending at scale. And then finally, Dr. Daniel Mwenda, the CEO of the Kenya Farmers Federation, KENAF, who is going to share his insights into farmer aggregation and market linkages. Welcome to the stage, Mr. Mwenda. Agricultural SMEs form the crucial ecosystem surrounding smallholder farmers, but they are often underserved by financial institutions. They struggle to access working capital. Financial providers frequently classify agri-SMEs as high risk. So during today's discussion, we want to try in the next hour to better understand what we're doing, what we can do better, and how to de-risk agri-investments and scale financing to smallholder farmers. Before we get into the discussion with our esteemed panel, I would like to first start by welcoming Mr. Richard Ofori-Mante to the stage. He is the Director of Agriculture, Finance and Rural Development at the African Development Bank, to make some opening remarks. Thank you very much.
Good afternoon, honorable ministers, distinguished panelists, esteemed audience, ladies and gentlemen. I believe all established protocols observed. Today we gather to address a critical mission: de-risking investment, scaling financing, and supporting African smallholder farmers. Our panelists represent key pillars of this ecosystem: financial institutions, insurers, farmer aggregators, and policy enablers. The African Development Bank is excited to collaborate with these partners in structuring financial solutions that unlock capital for smallholder farmers and agri-SMEs. Despite their role in Africa's food systems, agri-SMEs face a persistent 100 billion annual financing gap. Many financial institutions still perceive agriculture as high risk, citing climate variability, lack of collateral, market volatility, among others. This session is moving past those barriers, not just identifying challenges, but scaling solutions that work. What are we doing about it? At the African Development Bank, we believe that unlocking agricultural finance requires a combination of risk-sharing mechanisms, innovations, and market-based solutions. To that effect, institutions like the African Trade and Investment Development Insurance, ATIDI, play a crucial role in mitigating risk for lenders and unlocking capital for agriculture through risk guarantees and credit enhancement. Our partners like ZEPRI demonstrate how building insurance with credit solutions can reduce risk exposure and strengthen financial resilience for farmers and agri-SMEs. Banks such as Cooperative Bank of Oromia are integrating blended finance, digital credit scoring, and concessional financing to make agricultural lending more visible at scale. When it comes to farmer aggregation and digital solutions, organizations like the Kenya National Farmers Federation play a crucial role in ensuring the smallholder farmers are not only connected to markets, but also integrated into structured financial ecosystems through digital platforms. As we engage today, I encourage our panelists and audience to reflect on a few key questions. How can we expand the impact of risk-sharing mechanisms to ensure they reach the smallholders and agri-SMEs that need them more? What lessons have we learned from blended finance operations that have successfully mobilized private capital? How can we strengthen linkages between guarantees, insurance, and farmer aggregation models to create a more investable smallholder financing landscape? As we delve into these topics, let us remember that our ultimate goal is to empower African smallholder farmers. By de-risking investment, scaling financing, and strengthening resilience, we can unlock their potential to drive economic growth and food security across the continent. We look forward to your insights and contributions, which will be instrumental in shaping a brighter future for African agriculture. Thank you.
Thank you very much for that statement and those opening remarks. And once again, thank you to my guests. It's really a pleasure to moderate this discussion. We've spent this morning talking about looking at analyzing the landscape facing smallholder farmers. We've also had insights into the enormous financial gaps faced by smallholder farmers. And we also understand and see the scale of the opportunity. But one of the recurring issues and themes in all the discussions that have taken place this morning is the issue of risk and the perception of risk, which is really the key impediment to scaling financial opportunities and investment for smallholder farmers in Africa. And I believe the four of you were selected on this panel because this is your area of expertise and specialization. And I'm hoping during the course of this discussion, you can convince the audience and other stakeholders of the types of instruments available to reduce that perception of risk and that reality of risk. So I want to start by asking Mr. Manuel Moses from ATIDI. You're the CEO of ATIDI, and you play a crucial role in providing risk guarantees to financial institutions. What are risk guarantees, and how have these guarantees helped to reduce the perception of risk in agricultural financing?
Thank you. I hope you can hear me. Thank you. I hope you can hear me now. Yes. It's a pleasure to be here. Thank you so much for sharing our experience and knowledge in this area. I think it's universal that when you bring agricultural risks to my partners here, banks who are here, I think Bank of Oromia is probably convinced, but many other banks, they would tell you that they have been burnt when they've lended to the agricultural sector. So they are shy to expand their activities in this sector. There are many factors. Some of them, will be covered by my colleague, Ms. Murera, on climate risk and all that. But at the end of it, banks are shy to expand, financing. So we at ATIDI were created to try to manage that perception of risk by banks and the reality of risk, as you have correctly pointed out, that sometimes, perception is reality or reality is perception. Our organization sits between the farmers and the banks. How do we do that? We approach banks and tell them, listen, we would like you to expand your activities in this sector. And they say, no, but it's too risky. We say, we understand, but we are ready to work with you by taking off some of that risk in that sector, because we believe that that's the only way, one, we can tackle the unemployment in the continent. Two, we can actually feed ourselves as a continent. So somebody needs to, do something about the agricultural sector, and it's of course you financial institutions who have the resources. And we are now saying, how can we encourage you? So we do give our guarantees, as you mentioned them, or insurance that basically says, indeed, let's agree you are going to expand your portfolio by $10 million in Kenya for the agricultural SMEs. How about we say, if there are any losses of, say, $1 million, we will share in those losses. So that way, we expect the banks to say, okay, now I have a partner sitting by me on my side, encouraging us to take a little bit more risk than we would otherwise not do on our own. We also then go one more step and say, part of the problem we have noticed is that even the loan officers, the architecture of the bank is not geared for the agricultural sector. So we say, how can we train the bank and your officers to actually look at agricultural risk differently? Let me give you an example of, you could say to the agricultural enterprise, I would like you to pay every month, on the loan. But we all know crops take 4 months, 6 months to grow. So why don't you tailor the actual selling of the agricultural produce with the repayment? That is the missing part. Sometimes banks give rigid terms that do not necessarily match the reality of the agricultural cycle. So we do give technical assistance to just sensitize the banks to say an agricultural loan is structured in this way, because that way you are matching the cash flows and the ability of the farmer to repay you. So this is how we think we have done it in the past. That's one area of de-risking the agricultural sector. The other one is actually on their supplies. What do the farmers need? Sometimes they need fertilizer. I see my brother here who aggregates, and sometimes they need to buy these fertilizers in bulk, and the financing could be very large. Again, we do support those type of inputs at the national level so that we can aggregate and purchase fertilizers in bulk and give our guarantees to bring the produce in the country and hopefully pass down the benefits to the farmers. So again, working with aggregators. We also work on the other side. Now the farmer has produced the goods. I give an example of in the dairy sector here in Kenya, what we have done. So the farmers have produced their milk, they've sent to a milk company. The milk company says, I'll pay you in 30 days. Okay? But the farmer needs working capital today to pay his workers, to pay his operational expenses. So we've said, listen, if you give us those invoices that you have invoiced the big company, we can discount them for you by giving our insurance so that you get the cash now. So suddenly, the farmer who was supposed to get his money in 30 days' time now gets it in 24 hours. Again, benefiting the farmers. So these are some of the examples of how guarantees and insurance can help enhance the scaling up of the agricultural sector.
Thank you, Mr. Moses. I'm guessing most of the audience are not experts in this area. How is that risk shared? Where do you get the money to share that risk?
Again, thank you for that. The risk is basically shared between ourselves and the bank. At the end of the day, the bank is charging interest, isn't it? So I tell the bank, listen, you were going to earn, say, 2% of, risk premium from this lending. Now that I've shaved off 50% of that risk, please, can we share on that saving? So it's really the banks that pay us. It's not the farmer, actually, because the bank has been de-risked. So they would share a bit of their premium or their interest with ourselves. So that's how it is shared. We also, of course, want, as mentioned by the introductory remarks, that they are partners that we expect. The African Development Bank, other donors who can help in making sure that that premium, that as we call it, is affordable. So there are ways of now blending, finding funding from donors, from other multilaterals, so that at least the impact of that loan is as affordable as much as possible.
Much, Mr. Moses. Can you all hear me okay? Great. Okay, thank you very much, Mr. Moses. I want to bring in Mr. Deribi Ashfor, the CEO of the Cooperative Bank of Oromia in Ethiopia. It's a place I know well, and we've heard a lot this morning about banks and banks' perception of smallholder farmers and how impossible, that's the word I would use to describe, it is for smallholder farmers to access finance. You don't understand them. You don't understand the way the cycle works for farmers. But we also know that Ethiopia is a country heavily dependent on agriculture. You've introduced a digital lending platform for concessional finance to expand agricultural financing in your bank. Can you talk us through how this model has worked in practice and its effectiveness?
Thank you. Good afternoon, all. I'm really honored to be here as a panelist. My bank is owned, almost 60% of the equity is owned by farmers and the cooperatives. So since its establishment, we have been trying to finance farmers through traditional banking. And we need to be creative to really bring impact, reach out to the rural community. What we have done, we have established innovation centers 3 years ago, and understanding the partners that are coming with the fintech solutions, agri technologies. And of course, we have also adopted different way of approaching the farmers, including having the shipping containers branches. We call it Eco Branch, powered by solar power, where there is no electric lights. And we have also recruited 128 agronomists, where, of course, to fill the gaps of the Ministry of Agriculture and the government as well, technically by in-house. We believe that digital approach will bring impact to create financial literacy and digital literacy to the farmers. When we call digital, physically we have to be presented on the movable container, shipping containers. 70 of them are in operation. And of course, through our innovation team, we have strong relationship with the fintech companies like Kefiyya Technology. With Kefiyya, we have explored opportunities how we are really introducing uncollateralized digital lending to the community. And we came to Kenya so many times. We went to Rwanda, and I have seen they are doing good. The difference is they do have a national ID, but we don't have a national ID. So a KYC is one of the problem in Ethiopia. What we did, we started from historical credit scoring. Historical credit scoring, just credit scoring of banking transaction, debits and credit. Once we score that and provide loans, then psychometric scoring is the second scoring. It's AI-based technology. For your surprise, for a century, the banks in Ethiopia have reached to finance 400,000 borrowers. Within less than 2 years, we have achieved 1.2 million micro-business borrowers. It's about 19 billion birr, which is $150 million in terms of the prevailing rate. So with Kefiyya, we have another agricultural platform, Shagga Free as well. And we have started to score, using alternative score for farmers as well, digitally. And we follow still the traditional transactional data to score the farmers' creditworthiness. And unfortunately, as Daniel mentioned early in the morning, we have implemented the community pass, farmer pass. Over 500,000 farmers are already on the platform, and 914 cooperatives and 51 unions are on the platform. So what we did, the community pass has an integrated platform where the key agricultural players are interconnected to do transactions. Of course, as mentioned by Daniel, it is a credential to know how the farmers, the productivity, harvest, projection, and the traceability, and all this is on the platform. Finally, when we see the platform, it has no credit scoring. Partnering with Rabobank technology team and with our technology team, we have developed an alternative credit scoring engine that linked to the farmer pass, where we can easily trace the farmers' data to provide input financing and the finance their need, hard working capital. And also we are discussing with the Ministry of Agriculture as well to really provide farmers a medium-term loan to maybe rehabilitation in coffee area, pruning of coffee plants on phase approach. So what we have learned through this journey, innovation will bring solution to challenges. Now, data is the new collateral. So the mindset of the bankers should focus on data, consider data as a new collateral instead of following on traditional collateral. So when we lend the money, 19 billion birr without collateral, the outstanding amount is 3.2 billion. The payment, the risk we perceived in our mind, traditionally, I used to work for the bank. I used to work as, for 18 years in the biggest bank of, commercial bank of Ethiopia. I used to work as a bank from different level, like from officer to vice president banking operation. We had lending to the poor, maybe the lower community, is a risky. Of course, it is risky. There is no free lunch. We understand that the challenge is there. The challenge mentioned in the morning, the climate risk, whatever. But when we really innovate, we can mitigate. So mitigation approach, concessional fund, like we have partnered with MasterCard Foundation in 2 areas. The foundation supported in concessional facility as well as credit de-risking facility. And we have also partnering with USAID, of course, Mr. Trump. USAID in the past, Mercy Crops, and Care Ethiopia as well. So when we receive those funds, there's a challenge to reschedule their loans, to especially related when during the COVID, they supported them. The impact is very big. People recovered from the challenge that happened to them. If I mentioned you, one of the women who had 10 milk cows supported by USAID guarantee to reschedule her loan. Now she has 32 cows, her production from 75 liter to 550 to 600 liters per day. We have now provided 4.5 million birr, almost over $50,000. So it's all about learning and the journey to have that. And if we are creative enough and looking at the technology solutions, and of course blending the insurance. We have started discussion with a local insurance company. I'm glad Hope is here with Zapi. We have already started discussion with her, partnering with the local insurance. Pula is also there. So we will have a blended financing to the smallholding farmers to de-risk the credit.
Let me come in there. Thank you very much, Mr. Asfal, for that. I noticed that people were clapping in the audience. I don't know if they work for your bank, but it sounds like some real solutions that have been offered at least to smallholder farmers in Oromia, and I hope the bankers out there are taking note, and it would be interesting to hear about whether your approaches and your innovations and your solutions, how they can be scaled in other countries, but we will maybe try to come to that a bit later. But it sounds like maybe some of the feedback that we get about banks is not maybe 100% accurate, because it sounds like you have some great innovations there. I would like to bring in Hope Moreira. Hope, thank you so much for joining us today. You are in the space of insurance and financial inclusion as an approach to de-risking. Tell us a bit about your organization and how you utilize insurance to de-risk or change the perception of the high risk of investments in smallholder farming.
Thank you very much, Dege, and really a big thank you and congratulations to the African Development Bank for taking the leadership in this area, right? We're talking about survival, food security, employment, with the programs they are putting in place, ACRIFA, ADRIFI, as well as investing in organizations like ourselves to create the capacity and scale to find solutions where it matters. So ZEPRI is a Pan-African institution. We're set up by member states of COMESA, and we operate across Africa. And we are a reinsurer. But we also have a mandate for financial inclusion, because traditional products have really not made any significant change in the protection gap. So we have, over the years, therefore, decided to also concentrate on where the need is. And this is really, if you look at the structure of our economies, it is the smallholder farmers, it is SMEs. So we have therefore invested in this, in capabilities and technologies to do that. We have a subsidiary called ECA Africa that is an agri-tech that is solutioning for most of these things. So as we've had, there is a disconnect between the role of agriculture, right, especially smallholder farming, which is 70% or so of agriculture, and the access to credit and, of course, markets. Right? There is a big disconnect. And I think all of us have been trying to play in this area to find the solutions. And what is important is, we'll talk about employment that Emmanuel talked about. 60% are women and youth that are in agriculture. Of these, 65% are under 35. So unless Africa deals with this problem, we really are not managing for the future. So, and it's been said, why is there minimal lending into this sector? It's seen, perceived as risky. And we looked at it from our side and said, what can we do to be able to bring down this risk? Now, still, for smallholder farmers, 60% or so of the risk is climate related. A big balance is around health, right? And key man risk, what we call key man risk. This is an individual running this business. All of those are insurable. So we've gone to it and said, what if we carry this risk from you banks? Why wouldn't you therefore lend into this sector and lend at a cheaper rate? And this is what we've been trying to do, to embed insurance into lending, to de-risk smallholder farmers using technology. I mean, we do parametric insurance products. Satellite data has gotten better over time. So we are able to offer a number of things. We're able to offer advisory to farmers. We're able to onboard farmers from where they are. We're able to provide also advisory. We're able to credit score that some of the people are doing. And then we're able to tell the banks, this is the data, right? Data is king. And because we are many people dealing in this space, we've also built lots of partnerships. So, for example, like Cooperative Bank of Oromia, ATD, people like Apollo that I saw here. So who are the players in the field so that we don't all have to play in all the value chains? We need to be where we do this best, right? So yeah, so we've also last mile capabilities. We have what we call the village champions that are in these places that do offer, advisory to farmers. And in all this, therefore, we're trying to bring credit closer to the farmers, right? So we have good experiences. We have just last year brought about 1 million farmers into the credit accessibility through that. And we see that growing more and more. So in terms of some of the things we've seen as key success factors, it's really also putting people in cooperatives. It's really, really so critical, and maybe we'll talk about it after. When we talk about the things that we've done, for example, in Ethiopia, under another project that we run called the DRIVE project for de-risking pasturists, it becomes easier when farmers are organized. It becomes cheaper to access inputs and all the rest. So it would be really one of our big calls, that how do we make sure that farmers are organized? There's a critical example in Kenya on the KTDA, right? The tea development agency. That has been a key success factor for the tea farmers in Kenya. Why can't we do it for everybody else? And I'm sure my fellow panelist has a lot more to say about that. But we also do work with national agriculture insurance schemes. What are these? This is advising governments at a policy level to set up pools, because this is a risk that is big, that you need to pull in more and more people and more capacity. And when you do aggregates, you're able to also attract international capital in terms of insurance and reinsurance capacity, because you cannot do that at a small level. Solutions need to be regional, need to be continental, and then you're able to pull in global capacity. Right, so yeah, so that are some of the things we are doing, and I think the successes show that, if we all play well in these areas, then we can really de-risk the farmer and be able to reach where we want to be. Thank you.
Thank you very much, Hope Moreira. We have heard, we have discussed, we have talked about risk guarantees, leveraging insurance, and integrated digital lending. I want to now bring yourself in, Dr. Daniel Mwenda, the CEO of KENAF, which represents thousands of farmers across Kenya. You're in the space of aggregating some of these risk-sharing instruments. Given your engagement in some of these risk-sharing instruments, what have you seen to be the most effective innovations and approaches?
Thank you. So I think it's important the farmers come at this point, because really the crux of the matter is the farmer, the smallholder farmer for that matter. The Kenya National Farmers Federation, we are working with MasterCard Corporation, we are working with Microsoft for connectivity, we are working with the African Development Bank, we are working with Equity Bank, among other partners, in the context of what is called mobilizing access to the digital economy, MAID. Now, my friends here have talked about de-risking, and all day we've heard about de-risking farmers. Banks, for the most part, and credit institutions have always said that we don't know farmers. It's dark. We don't know where they are coming from, what their history is, their capability to pay. And I think what we are doing in this is exactly providing a solution for that. Hope has talked about the importance of cooperatives. To do this, you need to bring farmers together. You need to access the histories of those farmers individually, and then now you bring them together as a collective. When you bring the individual farmers, you are able to, the bank or the credit institution is able to look at the production cycles. They're able to look at the inputs that these farmers use over a period of time. They're able to look at mainly the small credits they are able to access, even if it's on mobile money, and how they pay for that. So building these profiles is very important. And by building these profiles, we present the lending institutions with the knowledge of the farmer. They are now able to identify who this farmer is, how this farmer has been operating for the past 2, 3, 4, 5 years. And from that, they can build a credit profile. Ordinarily, we know that credit profiles are built using the formal banking procedures and the formal bank systems. But with farmers, really, they do not have that. But if you look at how they have produced milk over a period of time, how they have sold maize or coffee or potatoes, then you're able to present that, and a bank using that can really tell this farmer is at this risk, or this farmer is at this risk, and credit now becomes accessible. What we've also seen by building this digital profile is that not only does it enhance access to inputs like fertilizer and seed, you can also build other things into it. You can build climate insurance. You can build health insurance, something that we are doing at the Kenya National Farmers Federation, after realizing that a lot of our members do not have health insurance. You can build credit access. You can build many services that these farmers are in need of. You also can enable the banks, like I have said, to build credit profiles of these farmers using non-traditional means, like I think what my friend here is doing in Ethiopia. So using FarmPass, we're able to not only do this, but also look forward to transforming really the financial and digital inclusion of farmers in this country, particularly when we realize that Kenya has a history in this. We all know about M-Pesa, mobile money, and what strains it has made in this country. We look forward to this FarmPass becoming the M-Pesa for farmers, enabling farmers really to be clued into the financial architecture, including farmers into the insurance, be it climate, be it health, be it pensions, if you talk about social protection. And the only way to do this is if these farmers' profiles are built, if these farmers are brought together in cooperatives, they are aggregated, because that reduces the risk, the lending cost of the banks or credit institutions. It reduces the cost of delivering these services to the farmers. It also enhances the credibility, if you will, of these farmers, because if, as an individual, maybe my credibility is not that high, if I'm joined with my fellow cooperators in a cooperative, a dairy cooperative, a coffee cooperative, a potato cooperative, then that is enhanced. And that way, banks are able to see us. And all these things that we are talking about since morning, maybe until tomorrow, and the discussion that really continues around Africa, how do we de-risk farmers? This is the only way to do it. This is how we see it. And we do believe that since last year, when we started working in the context of this, mobilizing access to the digital economy, we have now brought about 400,000 farmers into FarmPass. We do have a target to bring 3 million farmers into this by December 2027. And I do believe that this is something we can do, building not only on Kenya's history of adoption of such technologies, but also realizing that these countries, the majority of these countries' population are farmers. I look forward, of course, to working with a lot more partners here, because we do believe at KENAF that you cannot do anything big by yourself. You need partnerships. That's why we are working with MasterCard Corporation, African Development Bank, Equity Bank, Microsoft, now Atindi, Zepri, and many others, because that is the only way to really transform. You must work with others.
Can you still hear me? Okay, great. There's an issue, I think, with this microphone. Thank you, Mr. Mwenda, for that. I want to open up the floor for a bit of Q&A, but as you're the person on the panel representing farmers, just a quick question about scaling some of these innovations, because they all sound good, and clearly what's happening at the Bank of Oromia is working for farmers in Ethiopia. What are the major impediments to scaling some of these approaches?
Well, I think to scale this, like I've said, one, we need partnerships. We need to work with the government in particular. Of course, if you think about the Agricultural Finance Corporation or the government in general, we need that. Two, we need to really continue what we call digital literacy for farmers. This is very key for adoption because these are really new technology for most farmers. Capacity building for these farmers to adopt is needed. And from our experience, this is not something that you do overnight. It's something that takes time. So building the farmers' digital and financial literacy is very important. That requires partnerships, it requires resources. Of course, working with a lot more partners is important. And strengthening cooperatives, because again, like I have said, this works best when farmers are organized, when farmers are aggregated. And that's why really we are strongly in the forefront of standing for organized farmers, not only in Kenya, but also around Africa.
Thank you very much, Mr. Mwenda, for that. Okay, we have a couple of minutes left. We have a distinguished panel of de-risking expertise here on the stage. And I want to give people in the audience the opportunity maybe to pose a question or two. You could be representing a bank, you could be another stakeholder. Please just come up to the microphone. I see your hand up, sir, and your hand. If you don't mind standing up, there are 2 microphones. Ashers, if you could help me to direct those who want to pose a question to the microphones. I see lots of people standing up. We only have a couple of minutes. Please introduce yourself as briefly as you can and pose your question, and then I'll come to you, sir. Please go ahead.
Thank you so much. My name is Godwin Natse. I'm the country director for Sasakawa Africa Association. Let me first of all thank the panel members for the presentation. But one thing that made me curious to ask the question is, at what interest rate, what's the interest rate that you are giving farmers these loans? What is the interest rates that you are providing farmers, these finances? And then the second thing I'd like to find out from you, from your experience, how do you see the role of extension vis-a-vis the fact that it is clear that in most African countries, the extension system is almost broken? And how does that resonate with the capacity of farmers to actually repay those loans or those credits that you give to them? So those are the 2 questions I want to make. Thank you.
Thank you very much. We have to limit it to 2 questions. Question about interest rates, and I think it was role of extension systems. I couldn't quite hear. If you would like to take these questions, and then I'll come over to you. Can't hear you. Can we get some help up on stage, please?
Okay, now it's working.
Yeah.
So I was saying, I'm not a banker here. There's a banker, so he could answer it, but I'm going to try to answer on his behalf. So the interest rates that we are talking about here are dependent on each country. So the interest rates that you see in Ethiopia are relevant to the Ethiopian banking system. The ones you see in Kenya are related to the Kenyan banking system. However, what we are doing as partners is that because we have de-risked the bank, we have given you all these instruments, we have blended concessional money, donor money, our own money, we expect you as a bank to pass on that benefit to the farmer. So that is really how I would answer it. It varies, but we expect that since you've benefited, you pass on that benefit to the farmers. And it happens, and we monitor that.
Thank you very much. I didn't quite hear the second question about the role of extension
I got
systems.
it, yeah.
Okay.
So maybe she can answer. Yeah, extension services.
Can you hear me? No? Hey?
Yeah.
Okay. So just to add on to Manuel's, so we are in insurance and we are de-risking. So the idea is not only access. So we are trying to expand access to credit. We are also interested in the cost of credit. So really those two things should go together. We know the second one doesn't usually happen, and we're always challenging banks to do that. In terms of extension workers, services, when I grew up from a farming community, extension services were taken for granted. They were always there supporting. Its breakdown indeed is something that we need to worry about. So when I talk about having ourselves village champions, people who are on the ground providing advisory and mobilizing farmers, or what the farmers associations are doing, it is replacing what usually would have been the traditional agriculture extension workers. So maybe one of the call to action, because we do have ministers in the room, is that needs to be fixed. That is my view.
Thank you very much, Hope. Okay, room for just two more questions. I think this gentleman was first. If you could introduce yourself and ask a very brief question, then you, sir, then I think we'll have to wrap it up. Over to you, please.
Okay, thank you, everyone. My name is Abdulaziz Ajibola. I work with Rex Insurance from Nigeria.
Hello, everyone. Good afternoon. My name is Odi Akanaba. I am the Director for Small Business Development at the African Export-Import Bank, Afrexim Bank. I think the theoretical benefits of smallholder farmers aggregating themselves within cooperatives is very clear, right? However, in practice, funding these cooperatives has historically been quite challenging, at least for us, right? So I'd like to hear first from our colleague from the Cooperative Bank, but also from anybody else in the room who has experience in this regard. What are the success factors? What are the funding models that have worked in terms of DFIs like ourselves successfully financing cooperatives, not just in agri, but in any other sector that this has worked in? Thank you very much.
Your question was about the success factors. Did I hear correctly?
Well, success factors for funding cooperatives specifically.
Okay, who can take that question? Success factors of funding? Go ahead.
The success factor is focusing on technology, partnering with a technology company, and looking at the solutions they have been providing to the needy community. The other thing is a partnership. Micro business and smallholding farmers needs collaborative approach rather than competitive approach. So we need to have a collaborative race to really bring the intended impact. What we have done with Michu Digital Lending, we have discussed with 5 banks in Ethiopia. We have shared our experience and the challenges we have passed through. And now 5 banks are already integrated to the system. If you see the Ethiopian population, we are over 150 million. If we see the category of the farmers, 1.2% are enterprise level, which are around 220,000 households, and 12% are 2.2%. 2.2 million farmers are at self-sufficient level, which are still viable when we see as a bank, and 23%, over 10 million households are survival, which can need on their production, but they cannot invest into agriculture. For that chunk of households, we need collaboration with the government, with the development organizations, to de-risk the credit, and of course motivate them to produce more and to link to the market in that way. And the other thing is targeted approach like value chain financing. If we have an ecosystem, we need to look at the value chain, how we are really going to impact the overall value chain to link the smallholding farmers and the cooperatives to the market as well. And keep innovation, Innovation, now we are innovating. We have signed an agreement with FMO to finance the already unique borrowers from credit scoring to credit scaling approach, credit risk rating approach. For that, we have signed a credit de-risking guarantee with the FMO. We don't stop those micro business, or we don't stop to finance the farmers as they grow. As they grow, we need to go behind them to invest more to create a model farmers in the country. And of course, we need to innovate to have a blended finance, blended products, credit plus insurance. And we need to keep innovation. You know, when we see the Ethiopian population, close to 40% of the population are Muslim, so they need a Sharia-compliant financing, both farmers and the micro business. Now we have finalized the digital lending to the Muslim community with the Kafiyya technology as well. So keep moving, data usage, and of course advisory services as mentioned. You know, when we see the extension service, they are the skills, the capacity, the competency are behind the farmers. So we need to have our own experts. That's what we intervene, to have our own experts, where we link our expertise to local research institutes and agricultural investments, where we can build their skills and their competency to really provide the appropriate advice to the farmers. So at this time, we named our strategy S-Cubic Winning Strategy, Shift Segment-Led Shift at Scale. I think it is a right time for FDB to come to scale what we have done as experiment over the last 3 years. So we are going to scale it out to really bring the impact on our continent. So we need to collaborate not only at country level, at regional level. We need to collaborate together to really bring an impact at continent level to provide services to the needy community to really bring the intended impact. Thank you very much.
Thank you, Mr. Asfal, for that. And I know you're still here, so people can continue the conversation with you after this session. Final question, because we are out of time. You've been waiting patiently. I hope the microphone is working. Please introduce yourself, pose your question, and then we will have to wrap up this session. Please go ahead, sir.
Hello.
We can hear you.
My name is Abdulaziz Ajibola from Rex Insurance Nigeria. I wanted to add to what Madam Morera from ZEPRI had said. Beyond providing financing, it's also important that all of the risks, are properly managed to ensure that rates of crystallization are low, especially climate risk. And the best approach is collaboration, you've said. It's important for stakeholders to not compete at this stage, but more collaborate so that, all investments can be, the impact of investments, etc., can be shared across board. Thank you.
Sir, I wasn't quite clear on the question. Did you understand the question? You got it?
No, I didn't get the first question.
Okay, so we
contribution of insurance? Was that the question?
I think it was a comment. It was a comment.
It was a comment. Okay, so there was.
It was a comment. All right.
It was a comment.
I totally accept that. Thank you. Insurance builds resilience, right? I always say that there's no financial inclusion without insurance.
Yeah.
The quick payouts help the farmers because when rains fail, we don't wait for 3-4 months, because if they fail in the first month, they failed.
Yeah.
So by paying out quickly to farmers, they're able to recover very quickly.
Yes.
But we also know that having insurance helps farmers access better inputs, and when they do that, their productivity goes up to about 60%. And they are also able to lower post-harvest losses, 20 to 30%. So the data shows that insurance does bring a lot of value and resilience.
Thank you very much, Hope. I think, Mr. Mwanda, you wanted to just come in finally?
Yes.
In 30 seconds?
Yes, sure. Thank you. I wanted to respond to the question on extension. And of course, extension systems in most African countries are not functional. They are not working the way they used to. And this is why also organized farmers in farmer organizations or federations is very important, because organized farmers can offer these technical advisory services to their members using different means. We do that at KENAF using different media. Then the other question on success factors. One thing that maybe we shouldn't overlook is the feel-good factor that farmers have when they are able to access credit, when they are able to access insurance, when they are able to access different services digitally. And the only way to enhance this education is not through individual farmers, it's through organized farmer groups, it's through cooperatives. So we've seen that farmers feel satisfied, they feel very contented when they are able to access these services because they feel like just like any other employed person, just like any other person who works in Nairobi or another big city in Kenya or any other big city in Africa. So that is important. And then the other success factor is the bundling, and I think he's talked about it. So we are not only offering credit or products like fertilizers or seed, but you are also bundling many other services that farmers require. This also contributes to the success of this model.
Thank you very much, Mr. Mwenda. And I want to say thank you to all the panelists, Hope Moreira from ZEP-RE, Moses Manuel from ATD, Daribu Ashford from Cooperative Bank of Oromia, and Daniel Mwenda from KENAF. A round of applause, please, for these panelists. Thank you so much for these very interesting insights.